Linda, you ready?
Doug,
Yeah,
can you do the roll call, Suzanne?
I know.
Thank you.
We've replaced you, yes.
Forgotten up but not gone?
All right. Bad who? Yeah, who's that guy?
Got it.
He's overseas just now, you know.
Does come up blind as that.
Okay. This is the New York Fire Department Pension Fund Investment Meeting. Today is 2/19/2014. It's 10 minutes after 10. We're at the New York City Controller's Office, 1 Center Street, room 1117, New York, New York. We'll have the roll call of trustees. Janice Emery,
Here.
Susanna Vickers,
Here.
Justin Holt,
Here.
Steve Cassidy,
James Levin and Steve Cassidy's proxy.
James Levin,
Here.
Robert Straub,
Here.
John Kelly,
Robert Straub has John Kelly's proxy.
James McGowan,
Here.
John Farina,
Here.
James Lamonda,
James Lamont is on his way up until he arrives on the highest proxy.
okay. Sean O'Connor,
Here.
and White here. We have a full complement of folks, so we can start the meeting. We will start with the public agenda.
Okay, thank you. So if everybody wants to turn to their monthly book, before we go through December numbers, which seems like a long time ago, and then the January numbers, I just thought I'd give a brief overview of what I'm sure you've probably seen in the markets, particularly in January, where we had a tough month, particularly in the U.S. and non-U.S. equity markets. A lot of things had been going on. Concerns over China slowing, emerging market currencies, several of them got crushed. The Fed has continued to taper their bond purchases, so we've now gone from $85 billion a month to $75 billion a month to now $65 billion a month. There's uncertainty around the new Fed chair and what Janet Yellen was going to do or not do. The debt ceiling debate was again going to happen in Congress, which actually got resolved nicely in February, so that's good. But then on the other hand, you have all this uncertainty, but the economy is actually doing okay. So if you turn to page 3, start with a few charts that we can talk to about this. So this is the ISM Manufacturing Index. You can see in December it had spiked to 57. Now anything above 50 shows expansion. Now we're down in January, still above 50 at 51.3. So generally speaking, that looks okay. If you then turn to page 5, you look at the unemployment rate, and it's at 6.6%. But you could also argue that the amount of folks looking for jobs has gone down a lot, and so we don't really have a full participation rate. And so you question this 6.6% unemployment rate, which is clearly what the Fed is doing as well. They had been targeting, we might potentially raise rates if we got to a 6.5% unemployment rate, which they've just backed off of entirely because these numbers are a little bit skewed. But nonetheless, looks okay from the standpoint of that. If you then turn to page 18, this shows you all the volatility going on. It's been up and down and up and down. So this is the VIX index, which is a measure of volatility, and it had spiked in December. And now you're seeing it here in January at 14.5, but it spiked into the 20s, which was a big jump, again, reflecting the uncertainty in the markets in January. Now, February is turning out to be a different story, so the markets have reversed some, which is good to see. But if you then go to page 20 and you look at the 10-year Treasury, again, we were, feeling like the economy is doing well, so the 10-year was spiking up close to 3%, and now it's back down to about 2.7%. So now, I think generally people are feeling like maybe the economy's not doing so well, and bonds are starting to look better. So the gist of all of that is that there's just still a lot of uncertainty out there. I think it'll be a bumpy ride for the next several months at least. And so Why don't we go to the numbers then now, and I'll show you how all that played out. So if you turn to page 27,
Excuse me just a second, I just want to note that James Lamont is in the meeting, president of the meeting. Go ahead.
okay, thanks. So if you turn to page 27, again, this is going back, so December was a good month. And I'll just go through some of the numbers here. So the Russell 3000 was up 2.64% in the month of December, so very strong. The IFA index, the developed markets, were up 1.5%. The emerging markets, as we discussed, had a tough time, down 1.45%. You scroll down some more to the Core Plus 5, down about 60 basis points. You go down a little bit more to high yield, up about 55 basis points, and then tips down about 1.5%. That's December. If you turn to the next page, this is what happened in January, where the rockiness started. The Russell 3000 down 3.2%. IFA down 4%. Emerging markets down 6.5%. Then you go down to Core Plus 5, and you see Core Plus 5's up 1.7%. High yield up about 75 basis points, and then tips up nearly 2%. So that's all that happened, kind of reversing that pattern. The next page, 29, shows our contribution to return for the Fire Pension Fund for December. Now, this is the month of December. So the far left bar, the total fund was up a little over 1% for the 1 month. A couple bars over, the fiscal year to date then, through December, is up a little over 10%, which is a great number. Now when you factor in what happened in January, which we would estimate was cost down about 2%. So the fiscal year to date then through January, you're still up around 8%, which again is a very good number. I can tell you that February, given that it has been a little better in the markets, particularly in the U.S. equity markets, the assets under management for FIRE as of February 14th, which is last Friday, you're still at $10 billion in AUM. So given even all this rockiness, we're still at $10 billion. So that's good. If you then turn to the next page, which is our asset allocation and how we're set up. So you've seen this before, where the far left bar, the green, being U.S. equities, and then to the right, the darker blue bar being Core Plus 5. So we're a bit above the range, a bit below the range in Core Plus 5. So as we had done before and told you before, we did sell down U.S. equities. We paid benefits. Market movements happened. We added to Core Plus 5 an investment grade credit. So we're now within the ranges as we sit here today. So that's kind of where we are. So if there aren't any questions, that will be the end of our public presentation.
Any questions? Okay, yes.
That's right.
All right, so if there are no questions, we need a motion to move out of the public session into the executive session.
So moved.
Second?
Second.
Any objections? Hearing none, motion passes. So we're now under manager review and watch list update.
So yeah, we want to turn the cameras on.
Still see the red light on.
Yeah.
Oh, I'm sorry.